My name's Geoff Pyne, and I'm coming to you courtesy of Actions to Wealth team, who bring you Sunday market update each and every Sunday. This one is the 3rd of March 2024. Glad you could join me. Today I'm going to give you my appraisal of what I think may or may not happen during the week that's upcoming. Of course, there are a few announcements coming up for the week, and they need to be thought about. In particular, a couple of interest rate announcements, the non-farm payroll, or now these days it's called non-farm employment change, is coming up at the end of the week as well. So everything leading up to that may well be disrupted, if I can put it that way, or there may be opinions either way that lead you or lead the market into a pre-announcement position. That's why it's just a little bit tricky to get ahead of that. Maybe we need to wait until the announcements are out. Entirely up to what the market gives us before, in my particular circumstance. And it may well be that the market does set up for us. And here's what I'll be looking for if it does. First thing I'll look at, of course, is my little pet project, which is game changer bars. And this game changer bar is by its own lonesome this week, and it is Australian dollar versus the Swiss franc. As we know, the Swiss franc has been overpowering just about every currency pair of recent times, and we've all, or I don't say we all, that's not quite true. A lot of us have been waiting for this to turn around. It may be on the way, but it's tried before and failed. We've got a clear triple bottom sitting here. At a, well, almost perfect level by the look of it. It's not far away, and it's around about the 0.56 mark. The question mark here that I have is, are we willing to take on the levels at which we sit? Not so concerned about the horizontal level, because that appears to be well above us and would give us opportunity to trade and get money in the bank before we hit that level. What I would be concerned about is this trade line or trend. It's not really a trend line, so it's one of my trade lines. I do like the candle pattern, however. Failed to hit the monthly pivot last week, but I think you'll find that the monthly pivot in the next, well, for this week, which has just changed, has moved up to here, so it may provide us with a little bit of support there as well. So the bar's not too dusty, but I am thinking that I don't want to trade into that resistance level. Much prefer price to be down here so I could attack that with money in the bank. I'm not saying I won't take a position on that, but it is giving me pause to think, maybe the direction's okay, but maybe I'm just not quite ready. So I'll be looking at this on a smaller time frame. This is the weekly, of course. So I'll be looking for this on a smaller time frame to get some money in the bank before I hit that resistance area. It, as I said, is the only one that is a game changer bar this week. People ask me all the time, what am I talking about with a game changer bar? Well, the game changer bar is simply a key reversal bar. So if you want to Google that and look it up, it's a bar or candle in this case, whose low is lower than the previous and closed on or near its high. That's the definition. Obviously, if you're going the other way, you'd be looking for a candle. If I can find one, a candle, there's one kind of there. There's one there for sure. That's got a high higher than the previous and closed on or near its low. My definition of near its low is in the bottom third of the candle. So that's what I'm talking about when I'm talking about game changer bars. And to me, they have to change the game. So if the game here at the moment is bullish, then that kind of adds to the flavor of don't really want to trade this right now. Much prefer to see it happen here. And then the game, which is bearish, is changing to bullish. Game at the moment is bullish and hasn't really given me that pullback that I require. Anyway, it's the only one available this week, and it does give me a directional bias. So I'll be looking for price to come back into here somewhere so I can buy it up. That leaves me with a course of action that I take at this time of week, looking at the currency indexes. And I'm trying to get a strong currency versus a weak currency here, or a strong currency, if there is one, to trade against the weaker currencies. For that purpose, I go to this chart, and I've got all the major indexes up here, starting with the dollar. And the dollar to me looks to be still under a bit of pressure, which is interesting because I'm actually a bull on the dollar, but it does technically look to be under a bit of pressure. We've got a couple of patterns here. On the weekly, we've got that big trend line off which we have bounced and don't really look like going back through that at this point in time. So I'm favoring a little bit more downside with the dollar. And so I put that one under pressure. Conversely, and that is normally the case, if the dollar's under pressure, then the euro is probably not so much. And that's pretty much what I'm seeing here. You've got this trend line suggesting that we've had a false break to the downside, and we've now come back in that, or inside this range here, which is a pennant, triangle, call it what you want. And it looks to me like there's a little bit of upside left in the euro. And for that reason, I would mark that as a buy, whereas the dollar probably mark as a sell at this point, bearing in mind that you have got these announcements coming out later in the week. So out of the two, I'm a euro fan, I'm a dollar bogeyman. Going to the Aussie, we said this a few weeks ago, of course. The Aussie put in this amazing bar here. And since then, we've had inside, 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 inside. It doesn't change the fact that we're still underneath this trend line, which was broken. Gave me the indicator of a false break, which played out to perfection. But that we've been inside that ever since. So the market really doesn't know what to make of that as far as I'm concerned. And the Aussie is still under pressure at this level. So kind of neutral on the Aussie, but I can see that it is still under pressure. So I'd rather be a seller than a buyer. Kiwi, very similar chart as you might expect. They tend to go along together pretty much. Ranging pair. Is this stronger than the Aussie? Is it stronger than the euro? I'd have to say no, on the basis of it is still at that resistance level and bouncing off it with plenty of room to the downside. So I'm not a fan of the Kiwi this week. Here's the one that everybody's holding their breath on, I suppose, and it's the Japanese yen. Japanese yen, of course, the BOJ has indicated that they may be going into a non-easing program, or at least taking the pedal off the easing. And that's why we're seeing, for the first time in what, 1, 2, 3, 4, 5, 6, 7, 8, 9th attempt to actually get off the floor was to some degree successful, only marginally because it came off its high as well as coming off its low there last week. Interesting point. Technically, however, that we do find this big double bottom in place on the weekly chart. And we've gone back to November or October, in fact, of 22, when that low was formed, and repeated on November 23rd in 23. We're back here in March of 24, but are we here? And that's the $1 million question as far as I'm concerned. Is it possible that we can trust the yen to bounce from here? I think this candle's inconclusive, or telling me no, because it tried and really failed at this point. So I find it very difficult to trust the yen, because every time it has a go, it gets knocked over. And that may well be the case. You could say that it closed above its open, making it a bullish candle, but wow, it's not a great one, is it? However, I think it's under less pressure, according to this chart, and this may well be a higher low forming on that big double bottom. I think it's under less pressure at this very important time than is the Aussie and the Kiwi, or than are the Aussie and the Kiwi. Canadian dollar, cousin of the Aussie and the Kiwi, of course, a commodity currency, doesn't really know what it wants to do, does it? But same applies. It's under pressure, filling this range here, which is a clear box range. We've come off the top of that. We put in a lower low, maybe lower high, certainly a lower low here and here. We're maybe looking for another lower high, or this lower high may just drive it straight down to the bottom. Looks to be under pressure as well. So I'd rather be a seller of the Canadian dollar than a buyer of the Canadian dollar. Swissy, which has been, one of the strongest currencies on the board for quite some time, also looks to be, to my mind, a little bit under pressure. If I'm following this as a market structure, then same applies. We've got that lower low, lower high, lower low. Are we going to print a lower high? Not sure. Or are we going down to the bottom of the range? Very similar to what I've just shown you on the Canadian dollar. So again, I'd much rather be a seller of the Swissy at the moment than a buyer, which takes us to the last of our majors, and it is the British pound. Now I'm trying to make sense of this chart here and saying, well, is it under pressure or is it about to break out? I'd have to conclude, I suppose, given that we've tried and failed every single time to get through this horizontal level and indeed the trend line, that we're probably going to see the bottom of that trend or that little wedge pattern again before we go longer. So same as most of the others, it is under pressure. Conclusion that I draw from all of that is the euro should still be a buy, and pretty much against everything else. News and the yen, if you're willing to trust the yen. So euro and yen, I wouldn't like to trade against each other, but I could probably come up with a couple of combinations for the others, which I have done. And I'll share those with you now. The first of those is indeed the euro versus the dollar. Now, I said that the dollar's under pressure, and I said that the euro's under pressure. That's very true, but from a technical perspective alone, I'm able to draw a conclusion that if price is bouncing off last month's monthly pivot, and it does bounce through the bottom of the week before's candle, where I've had an order for since that candle appeared. In fact, I had failed to close that. I must do that in the morning. Well, I probably won't. I'll just reset the order because I think it's still perfectly valid. The box range has been tested to the upside, and we're put in a new low here. Is this the lower high, which drives the market down? That's what I'm counting on, or that's what I'm seeing. Technically, I think that's a distinct possibility. If I'm wrong, chances are the new monthly pivot, which will probably be down here somewhere, pretty much where price is, I would imagine, could well be now support underneath the market, and the market could go higher. But technically, I see this range continuing, and if that's the case, we should be down towards the bottom of it within the next week or so, or a couple of weeks anyway. That's the first of my watch list for the week. The rest are pretty much COM dollars, or the commodity currencies, versus the risk off currencies, which is interesting. Kiwi versus the Swissy is the first of them, and Kiwi has had a good run, as you can see from this chart on the daily. It's had a good run for a couple of weeks. Came off the top and put in this false break of not only the trade line that I've had here, but also the box range. And that will be proven correct if price comes back to here. And if price does come back to here, then I expect it will go down to here. That's my logic. And depending on how the market opens tomorrow morning, I will likely put an order underneath that bar, probably sneak my stop loss above Friday's bar, just to be a little bit more secure. but I'll certainly be looking to take most of it off as we hit the bottom of that range again. So probably only be about a 1-to-1 scenario, but I think if price does come back to here, it will certainly look for that level. That's Kiwi versus the Swissy. If I have a look at it on the bigger picture, you can see how very, very clear it is that we've been in a downtrend for the longest time, since 2012, in fact. Few upsets here, of course, with primarily, I think, the decoupling of the euro and Swissy, but it's been under extreme pressure ever since. And now we're in this box range. The turnaround point may not be far off. However, it would be quite acceptable, in my humble opinion, if we were to look at a potential reversal. So here's our double bottom. Here's our higher high. Here's our higher low. Is this now the point where this converts into a reversal? It looks okay to me on the weekly. I don't mind it at all. And the daily is giving me the opposite of all of that. So this is where it becomes tricky. What I'm planning on doing is, if this does fill this area here, that should give me a nice second, if you like, retest of this area. And it's at that point, sorry, not this area here. It's at that point where we should have another higher low, and I can pick up the potential reversal from this area here. So that's what's on my mind. Daily, looking down to here. Weekly, once I get down to here, I'm looking to trade this long. That's Kiwi versus Swissy. That's something that I'm almost ready to trade on CAD versus the Swissy. So CAD versus the Swissy, a little bit different. If you compare the two charts, we've got Kiwi versus the Swissy at the bottom of this range, just coming towards the top. With CAD versus the Swissy, we've had a false break, we've had a potential false break, which is threatening to get back above this area here. That's interesting in my book. And if I look at the smaller time frames and draw that line where I believe the true level is, and I get that true level around about the 65-cent mark, makes sense to me that we've closed above it and come back and retested it. I've even got this little channel here, possibly indicating that we've got an inverted head and shoulders poking there as well. If that's the case, then we're probably picking up a little bit early here in this instance, because it'd be an idea to let that break the neckline and come back and retest it. However, on the weekly, I see this almost game changer bar. I love a hanging man doji sitting there like that. It may well be the creation of the right shoulder. It may well be. I don't know that it is. So I'm going to use this as a directional bias and see if I can get in at maybe a better price on the daily a little bit later. Not sure how that works, to be fair, but that's exactly what I'll be looking for on CAD versus the Swissy. So yeah, it's all going to be a matter of timing, isn't it? Kiwi versus the Swissy short to get a long position. CAD Swissy, you may not get that opportunity to go short to get long. Finally, I spoke about the yen and how it probably is number 2 on the list of currencies that I feel can appreciate this week. And against the Aussie, which, as I depicted in my book, is still under pressure, I think it's reasonable to conclude that if price comes back underneath here and retests it as it has done, and price comes back to this area, it should continue with the momentum to the downside. I think if you look at this on a symmetrical point of view, we've probably got reason to think that price could come down to this level here. And if that's the case, and we entered underneath Friday's candle, put a stop loss above Friday's candle, 75 pips could get us maybe 170, something like that. Certainly a 2-to-1 shot in the first instance. If this does in fact reverse, and I've got a little scenario here I call the three amigos, then this could go well to here, this level, which would be a little bit more exciting from a reward point of view, and ultimately maybe even down to here somewhere. So that's why I'm attracted to that somewhat. Is the yen strong enough to cause that occurrence is the big question. I think it's worth a small risk in the first instance, and if it does grow or grow legs, or the yen gets a little bit of momentum behind it, then you can probably pick it up 2 or 3 times on the way down. So that's kind of where I'm at for the week. Looking at euro dollar short, Kiwi Swissy long, but after a sell-off, looking for the Kiwi Swissy to, on the daily chart, give us that false break conversion, then looking to trade long. CAD Swissy long and Aussie yen short, playing a false break of that trade line. That's pretty much it for me this week, and I hope you've got something out of that, some indication as to what I might be looking for throughout the week. No trades as yet, but potentially there will be one on Aussie yen, and I'm going to hang on to that euro dollar trade that I pointed out that I took last week as well. I trust you have a wonderful week ahead and look forward to your company next time I'm on Sunday Market Update. Bye-bye for now.